Patiently and methodically, FYI Resources has put together an innovative and efficient process for producing high purity alumina, or HPA, for the batteries and e-mobilities market, but also for the use in sapphire glass and ceramics. Now that the company has secured support from a tier one industry player and is closer than ever to make an investment decision, we spoke to Managing Director Roland Hill and asked him to give us an update. Welcome, Roland.
Thank you very much. Pleasure to be here, everyone. Thank you.
Roland, as it's been a long time since we last spoke, I would ask you to give our audience a short recap of what FYI is about and what your goals are.
So it has been a little while, and thank you for the opportunity to have a quick chat with you. Look, I suppose our goals are pretty simple. At the end of the day, we want to be the premier HPA producer globally. And we're setting a strategy around that. We've had a quite extensive and intensive development phase leading to a fantastic product that's been validated through a pilot plant and supported by our DFS numbers, which came out with some fantastic economic results. And that really has led us to the attraction of some tier one interest groups. So we think with all that combined, we'll end up being quite a fantastic offering in the HPA industry and certainly a well sought after product. So our ambition's pretty clear. We just want to be number one. Yeah.
Okay. Yeah. Well, let's see. We'll see how you get there, or if you get there, and when. As all important questions.
Sure.
We've been talking a lot in the past, and the markets change over the time, of course. Especially markets for a lot of battery metals or battery materials have been tough for some time. Although there's signs now that the sector is picking up again. Could you please tell us what kind of demand and pricing projections you're working with now, and what the final metrics are that resulted from your DFS that you mentioned?
Yeah, sure. So look, essentially what we're doing is still running with the same numbers that we did outline in the DFS. And our reasons behind that are fairly clear. I think there needs to be a point made quite clear is that I think while most of the battery suite elements have run a little bit hot and then cold and sort of interest is now returning, I think the market, the equities market, the investment market did run ahead of the demand cycle for most of those. Although the clear thing is that whilst there's still interest and increasing interest in the battery suite metals and minerals, is that most of that is directed towards batteries. And that's clearly the distinction with us. 95% or thereabouts goes to batteries. With HPA, we actually have a segmented market. There's two traditional markets, really. One is through the LED lights and some other consumable goods. About 60% of our product will be directed towards that. So we do have a market that's underpinned by a traditional existing market. Our growth is seen in the electric vehicles, and we're certainly paying a lot of attention to that. And I think because of that growth, what we are seeing since the release of our BFS or DFS back in March of this year is that the volumes and interest seems to be growing, and we see that that's supporting product price, although it is a little bit opaque, and we appreciate in the market that it is. But all of the one-to-one discussions and negotiations that we're having with offtake or various offtake groups, depending on the application, is that the price is being supported in those markets. So we're maintaining an increasing volume and maintaining price. Yeah.
Okay. Well, let's see how it goes there. It's always, as you said, it's a bit opaque, but we'll see when at the latest when you're starting the production. Now, FYI has been operating a pilot plant for some time, as you mentioned, and which allows the company to test its product, to produce materials for the many different parties interested in the product. And you just recently received some very positive feedback out of Europe from a European market participant. Please tell us about that, what this means for your work, and what opportunities might arise from that.
Certainly. Well, we have a fairly rigorous marketing strategy. It's a staged strategy. We continue to run our pilot plant. We haven't run it continuously over this period. It has been in campaigns. But after each campaign, we allocate a certain amount of product that's been generated from that pilot plant to a number of different groups so that they can go away and qualify it. Do their assessments, etc. The various groups that we are talking to, they have various applications and various markets themselves. So that qualification work is at independent rates of each other. So it's a little bit hard to, all I can talk about is generally. However, we are talking to tier one offtake groups, both on the traditional markets, the LED markets, and on the EV markets for the separators. And what we like to do is just make sure that we're trying to accommodate these guys as best we can. However, some groups are spending more time and a little bit more effort in wanting to jump ahead of the race, so to speak, in terms of the market to get established first. One of these groups is one that we've been dealing with closely, the European group that you mentioned. And some of the results that we did get from some of our early responses from them was fantastic. So we followed that up with a more detailed product, 20 kilos, I think we've sent to them. And essentially the bottom line is that it met all their desired benchmarks. It matched their product nearly perfectly. So with a couple of probably additional benefits being some aspects of our product that are not like the current supply, which comes from bauxite, but they do see some advantages in our product. So we'll continue on and develop that further, a few more tests and a few more things. And what we hope to do is shorten that assessment or qualification period for the product. So, but we're working in hand with a number of different groups just so that we can cover the market, different jurisdictions, different product types, these sorts of things. To have an overall portfolio approach to the distribution of our product. Yeah.
Okay. So, any idea of a time frame when you might an offtake might come from this?
Yeah, well, I'd like to see that as soon as possible, obviously, and of course, so with the market. It is an obvious question. Unfortunately, it's not that simple. It is quite involved and complex from their side. But they themselves go off and turn and probably talk to a number of their different customers about the interest that they might have in our product. So it is quite a convoluted and drawn out process. We'd like to see something this side of Christmas, obviously, and there's probably a reasonable chance of having something signed by then. However, we are just holding our breath and just taking our time and approaching this diligently, making sure that every aspect of our product is within their benchmarks and the expectations. That's first and foremost, the quality, meeting the quality, and then we can get to talking about terms and other things. But obviously we're trying all that we can do to speed that process along. Unfortunately, a little bit out of our control, but yeah, still hopeful. Yeah.
Okay, so we'll keep our fingers crossed that we might see something before Christmas. That would be certainly very interesting. And we have other things to talk about too, especially your pending or possible joint venture with Alcoa. FYI has obviously been doing something right, or a lot of things right, as you attracted a major player like that, and are now working towards that joint venture. How did that come about? Why do you think Alcoa chose FYI and did not go with another company?
Yeah, so look, it's an interesting thing. The honeymoon, I suppose, with Alcoa started some time ago, back in the days of our initial pilot plant test run, to be honest, back in October last year. We invited them along to that. I think it's fair to say that they're fairly impressed about the quality of work that we had achieved at that stage, the level of R&D and the development that we've done, and I think they went away from that process, did their work behind the scenes. Obviously it's a big group; it's very technically driven. they pride themselves on the quality of themselves. So they reviewed the market, and 9 months later, well, in fact, nearly 12 months later, they knocked on our door again, and we got starting to talk to them on commercial terms. About some pathway forward to forming an MOU, and we basically believe it's based on the quality of our work and where they see the market and what an ideal partner would be. So, fair to say that they've done their own homework on some peer groups and some other things that would be of interest to them, like the depth of the market and where the market is heading. Why choose us? I think that'd probably be better directed at them. I mean, we kind of know and understand and quite confident about their decision in choosing us. I think it's fair to say that we're only under an MOU at the moment. We do have a development pipeline that we're currently progressing with, and we hope to have something formalised late this year, early next year. And that'll be the proof in the pudding that the selection of us will actually be crystallised. The marriage of the two groups, I think, will be a fantastic one and would lead to us gaining our ambitions in the market. I think they'll be a fantastic partner to have, and the combination of the two groups would be pretty premium, I would think.
Okay, well, that certainly sounds promising, and in answer to some extent, the next question I was going to ask how and what time and how long it will take probably take to come to a joint venture.
Certainly, I can flesh that out a little bit more. As I mentioned, this isn't being an overnight thing. We have been leading up to this engagement for some time now. We did formalise it with the MOU signing in September. At that point, we had a fairly clear pathway as to how we would lift each other's skirts a little bit more, I suppose, if I can use that phrase, and understand each other's skills and techniques and technologies. And we're actually currently going through that phase now. We're about to start a separate pilot plant run so that we can work out a few intricacies that they want to understand a little bit more and drill down a bit further. That'll be a pilot plant run that will go for about 1 week, commencing middle of December. We'll get all the data and information back from that. We'll make the assessments, and as I mentioned, hopefully, given that everything's all been positive, that we can lead to formalising the agreement, the MOU change to a joint venture agreement, later December, early January.
Okay, very good. Another thing to look forward to Christmas and New Year's. Now, let's say the joint venture comes about, and we assume it does. What is the goal of the combined companies then of that joint venture?
I think sorry.
What do you want to achieve?
I think that's a good question, and that's certainly one on the forefront of most people's minds. I'll probably have to reinforce the fact that from both sides' perspective, the company's perspective, both companies are working very hard at formalising this. So we do see that there's a high chance of it happening, a very little chance that it won't. In the event that it does, certainly we do see the combination of both companies' skill sets, technologies, operating skills, marketing skills, the combination of all those will work very, very well together. And it's probably fair to say that Alcoa is, it's a large company. Our current output of about 8,000 tonnes per annum that we outlined in our DFS would be probably small in their terms of thinking. So we are looking at a broader market penetration in terms of, tonnage and potential operations and a few other things that we will see that will expand upon the DFS case outlined in March this year. So that's we'll see improvements upon that, I think.
Okay. Well, certainly interesting times in that regard, but also apart from the developments with Alcoa, in your latest presentation, it says that you're aiming for final investment decision sometime in the first half of 2021. Obviously, one of the biggest hurdles in this regard is financing. Please remind us, what are the requirements? What has FYI lined up already, and how do you want to finance the rest of it?
Yeah, certainly. Again, I think part of the quality of our work that we've done to date, the development, so it's validated through our DFS, has attracted quite a lot of interest, not just at Alcoa, who's probably stuck their hands up a little bit early, but there are other interested parties. And one party in particular that in parallel to our DFS was at $80 million of equity financing commitments. There is others. So our ultimate, so that's at this stage, but since the release of the DFS, it's in the hands of quite a few groups that are interested in financing. Again, I should point out that we're quite an unusual mining situation. We're more of an industrial than a mining, although we do a mining component. The attributes of our project, which are long life, high margin, high yield, these kind of components fall nicely towards a lender's requirements, quite untypical of a typical mine, which might have a 5 or 10 year mine life, so the payback has to be quick. Ours is long life, and we can structure financing. So we're looking at a number of different options. Some are just pure vanilla financing, like similar to a standard banking an arrangement. There are some quite non-traditional sources of financing that we're looking at as well, that are prepared to take quite a high element of risk in the asset level. Because of the premium and high nature of the economics metrics of the project. And of course, we're looking at other things like project financing through offtake. Of course, Alcoa is still there, and they would look at, whilst we haven't decided on the equity component that they're likely to take, but they will be responsible for their pro rata equity of financing as well. So there's a whole number of things that we're looking at doing that are market correlated, project correlated, and even opposite to market correlated. So not share price related, it's more project related. So, we're looking at a number of things. How the ultimate financing deck will look like, it's still a little bit early, but we're safe to say that we are advancing quite a number of things that are starting to look quite attractive. So we would see that body of work will come to a head in the first half of next year, perfectly timed, I suppose, with the rest of our development plans and I suppose our commencement plans for early development and fabrication commencement of the project.
Okay. Well, certainly looks like you're well on your way, but also there's still a lot of things to advance this year and starting into next year. So let's hope all the work pays off in the end then. Certainly for us too, although the FYI stock has had a very nice run recently, which is gratifying for long-term shareholders like we are, by the way. So I think since June, it's been up almost 450%. So why, in your personal opinion, should investors still think about taking a position in the company now?
Yeah, well, look, it is gratifying to know that the market is finally starting to see value in the stock through the appreciation of the share price. Why the share price has come up so quickly in a short little while, obviously there has been a return of interest in those battery suite of minerals and metals, as we talked about it earlier in the program. But I would like to also think that it's the culmination of all the work, the R&D and that we've put in over the last couple of years finally coming to head following the DFS results. That they speak for themselves, and I think our ultimate game is to get somewhere close to our published NPV, which is above $500 million US. for the project on a per share basis. We still have quite a way to go before we get to that point. So we still see that there's plenty of opportunity for price appreciation and shareholder interest, shareholder returns for that. And I probably would have to say that in terms of a group, we're absolutely focused on maintaining shareholder value and, in fact, increasing that. So we're doing a whole range of things, some of which we've discussed today, about building further value, attracting tier one groups to our strategy, but also maintaining or maintaining an anti-dilutionary type events so that shareholders can get a leverage. I have to point out that I'm a large shareholder in this company. That's reflective of the belief in the project, but it also, to a large degree, also tells shareholders that I'm one with them in terms of the shareholder leverage that I'm trying to seek as well, not just for them, but for everybody. Okay. So we see there's still a lot of upside to come. Yeah. Okay. Still early days. Yeah.
Still early days, though we've been following this story for a while now. But as I said in the beginning, slow and methodically. So I think too, or we think too, we're getting there. It certainly looks like it. Thank you for taking the time, and we'll be sure to do our next interview, not another 12 months from now, so a bit earlier next time. Thank you.
Yeah, I appreciate that. Thank you very much, Bjorn. Have a good day. Thank you.
You too. Thank you.